Hi guys, Christine Nomonsky here. We're talking with Hannah Stojanovski from Mortgage Architects to get some of her expert advice on mortgages.
Hi guys, Hannah Stojanovski here. I'm with Christine Nomonsky, and we're here to chat everything mortgages.
And I'm so glad you went first. Okay, so let's chat it. So one of the questions is, we chatted, what is the importance of getting a pre-approval before you start your home search?
Yeah, so many reasons. The big thing is, like you said, regulations and rules change all the time, along with rates. So people really don't know what they're qualified for today or what the lender's looking for. So a big thing, for example, is as soon as you shop over $1 million, you need 20% down. Not everybody knows that. And, our buying power has reduced since rates have increased. So we dot all those I's and cross all those T's so people can shop with confidence.
So when you mentioned that if you're buying over $1 million, you need to put 20% down. What happens if you buy with $990,000?
That's it, $74,999. That's it. So below $500,000, we only need 5%. Above $500,000, we need 10% for that amount that's above. So you don't need 20% if you're below $1 million.
Isn't that funny, right? How it's like a few dollars and then it makes a huge difference, right? So why is it that once you shop over $1 million that you actually require that much more down?
Government policy. So below $1 million, you have to buy, if you have less than 20% down, you have to buy mortgage default insurance. They don't insure above $1 million. So we're trying. It was in the latest federal election that one of our lovely parties would bump that up to 1.25 or 1.5, and I'm lobbying for that hard this year. Otherwise, we're stuck at $1 million. So could you imagine buying $1.5 million with less than 20% down? That would open up the market a little bit, right?
Yes, absolutely. So a next question. So if you're going to buy property for $1 million, how does that, over $1 million, how does that impact the land transfer tax that goes on top? So is there a difference once you hit over that $1 million mark for the land transfer tax as well?
Yes and no. It's incremental as you increase the purchase price. A big factor is, are you a first-time buyer or not? And are you buying in the city of Toronto or outside the city of Toronto?
Right.
So first-time buyers, I always estimate around 1.5% of the purchase price for closing costs. Second-time buyers were closer to 2%. In Toronto, you're 2 to 4%. It's a lot. So we're estimating that when I'm running numbers in the pre-approval, I'm going over how much they need for down payment and how much they need to have aside for the lawyer's office for closing costs.
Right, because in Toronto, when you're purchasing in Toronto, you're basically paying double.
Mm-hmm. The municipal land transfer tax and provincial.
Yeah, exactly. Because I'll have clients come to me often and they'll be like, oh, I'd like to live in Scarborough or Pickering because it's on the border. And they're both like that same type of commute to go to downtown. And I have to remind them that the land transfer tax is a little double on there. But the saving grace is
property taxes. And in Durham, they're nuts.
They are a little higher. Yes, absolutely. So that's fantastic. So Hannah, a lot of times I'll have people come to me that are shopping for their home and they're asking me, should I go to my bank where I already have an existing account, or should I reach out to a mortgage broker? Now, usually I recommend reaching out to a mortgage broker because I know you guys can source for more sources for them or more opportunities. But from your experiences, what would the benefit be?
You know what? The biggest thing, and I wish I could get my soapbox here because it's the number one question I have in my client calls is, our services are free to the clients. A lot of people don't know that. They believe mortgage brokers are for the wealthy or for someone that's going to pay a fee. Not true. Just like the mobile advisor at their local bank, we're paid a commission when their mortgage closes. So no fee to them, first of all. Second of all, what I find in my experience is mortgage brokers have a lot more experience, years of experience. I myself, I've been doing this since 2001, so it'll be 23 years this year. Whereas a lot of mobile advisors at the bank or financial advisors might be in the role a couple of years and then moving on. So that experience, I think, is invaluable to the clients, especially when it's free. And then all the lenders we work with. So we work with quite a few of the top chartered banks, and then all of the monoline lenders or mortgage finance companies. So for those clients who like to bank online, they have an app, they don't need to go to the branch on Sundays or any of those things, we often get better rates and better mortgage products by having a greater choice.
Okay. And are you a level 1 or a level 2?
Level 2.
Yep. Okay. So can you explain to me is the difference between a level 1 or a level 2 mortgage agent?
Yeah, great question. So level 2 mortgage agents can also deal in private mortgages. So that's the only time I do charge a fee. Now, I have heard horror stories here. So one big thing I say is to my clients, I set the fee up front based on their mortgage size, and there's no changing it and no hidden fees at the lawyer's office. So I'm honest and upfront with my clients. Level 1 mortgage agents can't deal in private mortgages at all. So should a client need a private second mortgage or a temporary private mortgage for a bridge, the level 1 agents can't facilitate that.
Okay. So would that be something that you could get at a bank or definitely not at a bank?
Definitely not at a bank. No, there are private investors. Yeah, I'm going to go back to the pre-approval as well for a second.
Oh, great.
And what people don't understand nowadays too is the lenders require a lot of documents. So if we're lucky enough to get a finance and condition or anything like that, or if we have a quick close, having a pre-approval means I've got most of those documents on file already. So it makes things quicker and smoother. My big goal is less stress for the buyers. They're going through enough at the time. And that's one thing I want to share. And holding a rate. So not so big now that rates are going down slightly, but if anything happened in the world and rates were to go up, we've held today's rates for 120 days or 4 months. So they know they can shop with confidence and they know what their monthly payment is going to be.
Just to clarify, with getting a rate hold for that 4-month period, it does require the client to purchase and close within that rate hold time period.
Yes, great question. So when we're in that 4-month period, I'm sending the clients weekly tidbits about property taxes or rates or why it's important to have your own realtor, things like that. And then a month before the rate hold expires, I send them a reminder that your rate hold's expiring. So unless you buy today and close in 30 days, we're going to need to talk about renewing that rate hold and what that means and how that's changing your rate and your monthly payment going forward.
Great. And so the rate hold secures you a rate for if the rates go up. But if the rates go down, you can actually get them a lower percentage, even though the rate hold was at a higher amount. Does that make sense?
Yeah, no, that's a great question. 100%. So 2 things. Number 1, when they purchase, I shop around for the best rate again. So we aren't locked in with that lender by any means. That's just a buffer. What I say is my goal is to beat the bank. So if there's anything we could do to beat the bank, we're going to do that. So we shop around again, number 1. Number 2, in that 30 or 60 days that their purchase is closing, I have a weekly rate drop check. So if rates are still going down before the closing date, before we instruct the lawyer, I'm checking and getting the best deal every single week for that.
Perfect. Yeah. You're definitely doing your job.
There you go.
Service the client's needs and getting them the best rate you can.
Yeah.
And no, how do you advise clients when they're shopping if they're when I'm working with my clients, I'll say, you know what, your mortgage isn't always about a percentage rate. Mm-hmm. It's about tailoring it to your needs, right? If you're going through a transitional period and say you know you're only going to be in this home for 1 or 3 years, then why would you get a 5-year rate, mm-hmm. right? So make sure that you chat with your mortgage broker about something that's going to suit you. It's not always about the rate. Mm-hmm. You don't want someone to lock in for 5 years and they have to move in a year and they're paying penalties. So when you're chatting with your clients or your prospective clients, how do you navigate that with them?
Yep. So one of the things I talk about is their short-term goals and then long-term goals for both this home and the mortgage. Some clients are selling multiple properties and want to be mortgage-free in 5 years. So we look at a couple of things. The variable rate mortgage, the penalty is only 3 months interest. But sometimes, depending on what's going in the fixed rate market, the penalty is only 3 months interest. So we look at those 2 things. We look at the 3-year perhaps versus the 5-year. But if the 5-year rate is lower, they may not qualify on the 3-year because of the new mortgage qualifications. So we look at all the options and explain in full. Typically, you could put a lump sum down on your mortgage every anniversary year. So I tell them just call me and we can stage the timing of that to reduce the penalty. As well, the penalty on the fixed rate mortgage at the larger banks will be more than the monoline lenders. So if we know it's going to be a short-term mortgage and we have to go the 5-year fixed rate, we'll go with a smaller lender that will have a reduced penalty for the clients. So all those things we touch on in our discovery call.
Perfect. Yeah.
More mortgage information than you ever wanted to know.
I'm good because